Alrighty, what's going on, guys? Edward here, back with another video. Thank you so much for being here again. And in this time, in this opportunity, I want to share a strategy. It's not from me. This is not my strategy. It's called Silver Bullet. I don't know if you have heard of it, but due to some requests on my channel, some of you guys actually wanted to see how I explain this. How can I explain this strategy? And I'm not gonna lie, this is like this particular strategy is, to understand it, he shares this for free in his channel on ICT. Okay, you just look for it on YouTube, just look for Inner Circle Trader and ICT, and you will find out that he has a lot of videos in there actually on his channel. He explains everything there for free. But if you go through his videos tends to be very, very long, and he explains this thing, but I'm not gonna lie, it's very complex. And the way he explains it, you know, if you're watching a 1 hour long video of his, he normally points out a few things, maybe, you know, in like maximum 10 minutes or five, you know, from 5 to 10 minutes. That's all you need. And he over explains a couple of things in there and makes it more complex, more complicated. So, I mean, you can still learn from those videos, but you need to be a very well experienced trader to maybe understand some of it. If you're a beginner, a complete beginner, it is very complex. It is very complex. So what's happening is that a lot of traders that happen to go and take the time and go through all of his videos, you know, they're actually pretty much reducing this amount of hours, you know, explaining it and just making it shorter. All right, like pretty much digesting all this information. And I happen to find a lot of videos on Silver Bullet as well on YouTube from other traders. They are trying to do pretty much the same thing. So I'm going to explain it basically how I understand it, you know, and in simple terms. All right, and just I will show you basically what he does. All right. So Silver Bullet is actually the strategy. That's the name of the strategy, and according to him, happens 3 times a day. And you have, you know, the hours basically. It happens from 3 a.m. in the morning to 4 a.m. in the morning. This is New York time. Okay. So from 3 a.m. to 4 a.m. you're gonna find this, and then you have 10 a.m. to 11 a.m. and then you have 2 p.m. to 3 p.m. Okay. He normally trades in I've seen actually the last couple of videos of his, and he likes trading only on the 1 minute, especially S&P 500. Okay. Now I'm going to give you these examples only on S&P 500 because that's what he uses. Okay. I have tested out on gold, of course on Nasdaq, US 30. It's about the same thing. Okay. But you have to do your back testing, guys. I'm not going to tell you could just go ahead just after watching this video and you're going to be making money right away. It's not like that. All right. You need a lot of back testing. Just like any other strategy, you need a lot of back testing, and you need to have an idea what price action is, because it's mainly price action. What he's doing right here, it is actually price action. Okay. But you will understand in a second. So basically what he is looking for, this is sort of an idea of a setup that you want to be looking for, that what he looks for. Okay. So it's basically, let's suppose this is, you know, this could be at this point, it could be, remember, you have from from 3 a.m. to 4 a.m. All right. I'm giving this example from 10 a.m. to 11. It's the same. So basically what he looks for is some sort of liquidity. The market has to be taking some sort of liquidity. Okay. And he's mainly looking for a fair value gap. He's not even paying attention to order blocks. And he is actually the main founder or creator of smart money concept, you know. And he used to trade the actual order block, but he's not doing it anymore. He's actually entering at the fair value gap. Why is he actually not taking order blocks? I'm not sure. Maybe it works better. It's because sometimes market tends to not go to the order block, but react to a fair value gap or imbalance and go. So I'm saying that most likely, you know, he's doing this because he don't want to miss entries. He's most likely missing most of the entries. Most of the times the market is reacting on the fair value gap and not on the order block, at least on his view. Okay. So what we have here, you see the market actually sweeping a previous liquidity. Okay, close liquidity. We're going to be actually showing this example on 1 minute time frame. I'm going to stick to the 1 minute time frame because that's what he does. Okay, he mainly looks for this setup and he trades on a 1 minute. Okay, I don't know. I have not tested out. I don't know. I don't think actually this work on bigger time frames because we're literally trading 1 hour. That's it, So if you go on a 1 hour time frame, 4 hours, it's not gonna work. It's not gonna be the silver bullet strategy. Want to trade the silver bullet strategy is basically a scalping strategy. You need to be on the 1 minute, 5 minute maximum. Maybe go on 50 minute, but these are the things right here. Definitely 5 minute, 1 minute. I like the 1 minute in this case. So you see what's happening. Price is taking some sort of liquidity right there. It literally is just doing what it's doing right here. Probably this is a pause, change of direction. The price actually comes back. It will leave a big imbalance right here, right? So he actually enters at the gap and places the stop loss above that potential order block that is right here, right? He's not placing the stop right here just at the end of the gap. No, because he knows that probably the market will actually go a little higher. In this case, we can actually get a little higher. So it's a range, anyways. So he placed his entry right there, and his stop loss is actually right there. Okay, and he normally aims to take profit to maybe this previous lows right there. So let's go ahead and jump on the charts, and let's actually go to 1 minute time frame right here. So let's go ahead and clear. All right. And so at this point, I'm not going to start from 2. I'm actually going to start from 10 to 11 because we're currently live on the market. Markets are open right now. So let's see. I'm going to mark up the zone from 10 a.m. to 11. All right. 10 a.m. to 11. And let's see if we can find something. Let's see. Right here. All right. So I'm marking this zone up right here. And what we have, let's see. In this case, it's, as I mentioned, you need to do a lot of backtesting, guys. Lots of backtesting. What you're seeing right here, in this case, the market is, you're going to mark it up from here, pretty much. Before the 10 a.m. in the morning, this right here was the last high, and this is the last low. Okay, so price is sort of in the middle. Okay, we need to look. There's several different ways that you can do this, but in this particular case, price started right here, right? 10 a.m. in the morning. Okay, market actually starts moving up. We're going to be looking for some sort of liquidity sweep. In this case, if the price is pushing up, in this case, price is pushing up, we want to perhaps look for a liquidity sweep to the downside. Okay, I hope it makes sense. You need to wait for the price to do its thing and take at least the first liquidity. Okay, in this particular scenario, we do have a liquidity sweep in here, right? The body of the candle did not close below, right? Induced and then pushed up. We have to be paying attention to imbalances, okay, and fair value gap. All right. So I don't know if you can see, but in here, in this liquidity, market drop, also creating an imbalance right here in this case. But be careful because this is where it gets confusing. As I mentioned, it's not easy. It's not easy. It's like any other strategy. It's very complex. Sometimes you're going to be like, oh my God, is this an imbalance? Okay, should I go with this sale? Right? If you were looking for this zone right here to go for selling, no, it's not going to play out because it's not taking any liquidity at this point. So what's happening here, I don't know if you can see, but since we're trying to look for buys, price is pushing up, right? In this area, there is a little bit of gap. There is a little fair value gap right here, very small, okay? Your entry this happened after the liquidity. You see the market swept the lows from the moment 10 a.m. started, right? Started dropping and then pushed up. It went down again. It's not taking any liquidity. It pushed up again. Now sweeping the liquidity. Boom, sweep the liquidity. Price after sweeping, pay attention. Price retraced very strong, leaving a fair value gap right there, right? Your entry in this case, it's very tight, and this is on a 1 minute time frame. That would be your entry. Your stop loss would have to be below that low. All right. Your take profit, he normally aims right there. That's your first TP. Okay. Now, if you want to aim higher, it's up to you. You want to aim it all the way to the top, it's up to you if you want to aim it there. See, but in this case, in this particular case scenario, the market only reached this previous high. At least they give you a what? A 1 to 1, 1 to 2. 1 to 2 risk to reward, so it's not bad. This is what I'm saying. He normally trade this way mainly in on fair value gaps in balances, and his risk to reward ratio is very short. There's nothing in comparison to what I've been doing for a long time. Trying to aim for a 1 to 6, 1 to 7 risk to reward. It normally takes a 1 to 2, or sometimes even a 1 to 1 risk to reward. So this is not for everybody. This is also not for everybody. You If you don't like this sort of thing, or you think it's very complex, as I mentioned, you're gonna have to test it out and see if it actually works. Let me go here. I think I had spotted one position right here before. Well, let's go now to from 3 in the morning, 3 a.m. in the morning to 4. All right, I'm going to take the time. I think I'm going to make this video a little longer for you guys to see. Well, here we go. Okay, so we need to see some sort of break, okay? Pay attention. What happened here? Market is dropping. It's literally just since right here. 3 in the morning, market is just going down, going down, going down. If you wanted to go selling, there was actually 2 opportunities right here, to be honest. If you wanted to continue go selling, like continue with this trend, there was, you can actually continue right here. There was a fair value gap right here, and the market came and mitigated that, boom, and continued dropping. Okay, very small, but this is very little. Okay, sometimes you're not going to have opportunities. You're not going to be seeing anything at all. But sometimes you will be seeing more than one opportunity. Okay, so hold on. Right, this would be your first TP right there, 1 to 1, and then you go for at least your 1 to 2. If it reached it, looks like it did reach that 1 to 2, at least right there. Okay, or another position that, if you pay attention to what happened, we were bullish. Okay, you look a little bit in the back, in the past, market is actually going up. This is starting to take some sort of liquidity. Okay, which this is what is based off. Basically, right here, market took liquidity from these lows, even from this lows right there. Market swept this lows right there, right? And after sweeping, let's actually do that. Let's go with that last one right there. Market swept the lows and came back up very strong. Look at that. This is what we're looking for, especially this one. This one I like it the most, okay? Because look at this right here. This box, this fake out, which is what's happening right there. This is a fake out. Market is coming back up very strong, and look at that fair value gap right here. Right? So in this case, within this hour, we do have a fair value gap. Okay? Right? Now, where's the entry? The entry would have been there, the fair value gap. The stop goes here. And the take profit, well, you could have aimed that, as I mentioned, previous high. You have different highs right there. Maybe you were remember to be taking partial profits, or at least you're halfway up. You hit, you take partial profits, put stops to break even, So market did actually ended up pushing up. But I like that the market did this sweep. This is what we're trying to look for. Sometimes it happens very small, but this is what we're trying to look for. And this is what he looks for. So let's go ahead and continue. Now on the previous day, let's go from 3 to 4. On the previous day, let's see. 2 to 3, I'm sorry. So here, all right, let's see. 2 to 3. Okay, here we go. Price pushed up really nice, but did it give us an opportunity? We'll see. We have to wait, and we understand price is going bullish. Okay, that gives us an idea. Okay, we are trending. Okay, again, this is like any other strategy that I have ever explained here in my channel. Strategies work better when markets are trending. If they're ranging, they tend to lag. So market is sweeping this lows. Just look at that. It's a nice sweep from this low. Pretty much was consolidating, pushed up. Boom. This is when we start actually looking for setups, right? Price drop is, if you also think about this, the the market was actually giving you a fair value gap right here. Look at this. There is actually a fair value gap right there. But why would you be looking for sell when you know price is going up? It's going bullish. So at least from here, for the past few minutes, market has recently broken a structure. So we're trying to look up, you know. So in this case, if you would have entered in this sale because you wanted to sell, yeah, that's valid. At least you have that fair value gap. You would have got stopped out. You see, not strategy will always play out, but always if you follow the trend, most of the times you're going to be right. Let's say you wanted to go for 1 to 2, you got stopped out, right? But if you're following the trend, you're just waiting for that buy formation to show up. So where was the buy formation? Let's see. So price fakes, right? It goes down and it comes back up. Do we have a gap here? Maybe there's a little gap on that one, right? There's a little bit of gap in here that perhaps you would have taken, or you waited a little bit more and look at this one, a lot better, right? Much bigger gap, right? Market actually give you the chance to actually get in again. So if you would have entered there, you would have actually placed your buy position, your stop below the low. Hold on. Below this low, and take profit, at least here where you go for that 1 to 2. Yeah, that's your, at least your first TP right there. Price continue pushing. You don't know how far that thing is going to go. I recommend you maybe using a moving average, maybe a 50 moving average or 20 simple moving average, so it can keep you on the trend, on the actual trend, because you don't know when it's actually going to stop pushing up. If you're using a moving average, a simple moving average is going to tell you perhaps when to get out. So you want to take the most out of it. So, but anyways, if you don't care and you're fine with the 1 to 2, that's fine. At least you're understanding the concept, okay, where the entry is, and you're getting one specific hour. So you have 3 opportunities throughout the day, 3 chances. If you don't see this sort of formation, then you don't trade it. You don't trade. Let's see again from 10 to 11. Let's see from 10. All right. So as I said, you need to know, are we actually trending? Is the market actually trending? Yes, we are. Market is actually trending right before 10. So now 10 a.m. comes in, and now we're going to be looking for that. We're going to be looking actually for the first liquidity sweep. Okay. Now, what happened here? Look at this. So price pushes up from this move, right? Actually pumps up from here. It's breaking this previous high, goes to the upside, pulls back. Right here, it's already leaving a little bit of gap right there. Okay, if you wanted to take that one, that's fine. Your stop loss would have to be below this low. Okay, if you let it go, you wait. Price is pushing up. There is no gap right here. You actually want to see what's happening. So look at what happened. This is what I like the most, because we see a clean break right here. You see, price tried to break below and it comes back up very strong. When it comes back up right here, do we have some gap? We do have. It's very little. The gap right there is very small, very, very little, right? We do have that fair value gap right there. Long position in this case would be right there at the gap, at the top of the gap. Okay, your stop loss below, right there, and your take profit. Remember, this is the nearest. Price is pulling back. This case, this high. Since after the price push, pull back, this would be your TP1. This last high right there, that would be maybe your TP2. And this is a nice 1 to 4 risk to reward. It looks very, very, very small, very little. But to be this on a 1 minute time frame, it literally took you 1, 2, 3, 4, 5, maybe 6 candles. So in 6 minutes, you hit a 1 to 4. You know, it's very quick, very, very quick. You're in and out. Market did another sweep. Now look at the difference right here, and just pay attention to what's happening, because market did another sweep right here. It actually gave another chance in this case. See, it failed, came back up very strong. Where do we have a nice gap? We have a nice gap right here. In this area, we have a little bit of gap on this one as well. But hey, this is very far away. I don't know if you would do this on this one, because but at the end of the day, it doesn't matter, because you're risking 1% or 2% per trade. It's very important to understand that what you're risking right here, pretty much in this distance, was the same that you were risking in this area when you were entering right here. Okay, just because this looks smaller, right? This stop loss looks very tight, doesn't mean that I'm risking less right here and then I'm risking more. No, it's the same. What changes is the lot size. Okay, the amount of pips actually doesn't matter. What matters is the lot size you're using. Here, maybe you were risking a 1% on your account, right? And right here, it has to be the same percentage. It has to be also 1% of your account. What is going to change is the lot size. Right here was a bigger lot size. Right here, it's a smaller lot size that you're going to be using. Okay, there are actually calculators for that. I do use a risk calculator. I'm going to leave it in the description below if you want to use it, test it out. It's actually for MT4 and MT5. Is beautiful. That particular tool works really, really well and helps me speed up my trading. So recommend you checking it out. I do have a video actually on that as well. So you might want to check it out. I'm going to leave the link in the description. So let's continue looking now for this one. I actually had, yeah, look at this. I actually had it in there already. So look at what happened in this particular case. Let me mark it up. So we're going to go from 3 in the morning. Is it 3? 3 to 4? Here we go. 3 to 4. What do we have? Market is sweeping. We had a couple of things going on. Market is dropping already. Very strong. Dropping, right? Price creates a low, pulls back. Now in this area, right here, you see price drops, induces, take the liquidity from that previous low, and it comes back up. Very strong. You're starting to see the momentum, and boom. This actual momentum right here was the one that mitigated. Basically, this was your entry. This would have been your entry right here on that one. The stop loss, just look at this, right? It's very far away. That's fine. You're still risking 1%. Okay. Where's your take profit? Closest one, okay, would be your TP1. Okay. Once you hit TP1, you should be on break even. Okay. In this particular case, the market just turned around, right? And eventually got you out on break even. If you were looking for the 1 to 2, let's see if it actually hit the 1 to 2. Did it hit it? Oh, it did. Okay. So, if you want to at least secure that 1 to 2, 1 to 1 risk reward, hitting TP, moving to break even, 1 to 2, you got to do something, Don't let the market just get you out. You have to secure profits. But that 1 to 2, it's more than enough, at least for this strategy. So let's continue. The next day, I'm just trying to show you examples that it's possible to find actually every day one entry. Almost every day you can actually get an entry. Sometimes if it's not clear, guys, just let it go, all right? Or just look into another, I don't know, maybe a currency pair or somewhere else. A couple of things you can do. So from this case, from 2 to 3, 2 to 3, there we go. So, okay, what do we have here? Market is dropping insanely. I think there was some news right here. Be careful with this. Be careful with this. I don't like actually trading news. But in this case, price was dropping very strong. We had a fair value gap right here. Market actually reacted to the gap as well. On this drop from here to here, we had that fair value gap and got filled with this candle. So if you had an entry right here, the stop loss have to be above take profit 122 at least. Let's see, continue, price continue creating a low, pull back, another impulse, very strong impulse right here. We do have another fair value gap right there. You could have taken also this one, that gap right there. If you wanted to get in into this short position, your entry would have been here, your stop loss above that high, and your take profit at least to this low. Yeah, it's continuation. Maybe as your TP1, and if you were aiming for a TP2 or higher, price eventually actually started turning back up, returning back up. So, but look at what happened, because in this sale, if you caught it wrong, look at what's happening right here. Market is actually reversing, right? Starting to reverse. You see from this low, barely. This is very small. Market did sweep. I would have rather actually the body of the candle to go below, but it did took that liquidity, did sweep the low and then pushed up. To be honest, I would have rather the body of the candle to close below to be a complete fake out. But at this point, there was a fair value gap also right here. And if you were interested in looking for buys, you could, but it's very little right there. I rather actually wait for a much bigger momentum to the downside in this case to catch the entire fake out. And the bullish pressure right there, I would love it to be much bigger, because you can still get a back entry. That's why, guys, you have to do a lot of back testing, lots of back testing. Right there, your stop would have been below. Take profit as you start pushing up. Maybe this is your first TP, going for the 1 to 2 at least, or you're aiming at previous high. There is a gap right there, right? Also that it might actually be filled. So you could be aiming those highs. But it's reversing in this case. You were going for a sell as a continuation of the drop, or you wanted to catch the buy. Okay, but always be careful, because you want to see this sort of fake moves. Breaks, and as soon as it breaks, you want to see a return back up very strong with a strong momentum, and you need to spot your fair value gap. Okay, let's continue. Here, let's see. All right, from 10 a.m. to 11. I know you guys are also going to ask me, Eduardo, what if I make an entry and the price has not reached my TP by the time the hour is gone, from 10 to 11? Hold it. Maybe hold it for a little bit longer. You're on a 1 minute. For sure, the market is either going to stop you out, or it's actually going to hit your TP like on the same day for sure, because you're scalping. So these trades will definitely be hit on the same day most likely. So look at what's happening right here. We are bullish. Okay, price is pushing up. So we wait. 10 a.m. Boom. 10 a.m. starts to move up, and then it starts consolidating, consolidating until boom, it sweeps. Look at the sweep. This sweep right here, boom, right? Price broke, started struggling, and it came back up very strong. Look at the gap. You see the fair value gap. I know that most likely right here, most of you were saying, oh, but there was an order block right there. Yeah, but we're not trading the actual order block. We're trading the fair value gap. So in this case, what I'm going to wait for the return, market is sweeping what the theory is, what pretty much what this whole point is. There's a nice support right there. Market is sweeping liquidity, okay, which is the whole main thing of this silver bullet, sweeping that liquidity, okay, and then comes back up very strong, and you need to spot that fair value gap. Do we have a fair value gap? Yes, we do. So in this whole zone, we do have a fair value gap right there. Long position, your position would have been here, your buy, your stop would have been below this low, and the TP, securing profits right here. That's your TP1 basically, and it's almost a 1 to 2 right there. And this one looks like it would have got you on break even. I mean, if you were aiming for that high, at least going for the 1 to 2, I mean, it was pretty much right there, just very close to the 1 to 2. If you want to continue holding, remember, you have to be on break even, yes or yes, guys. It's better to be stopped out on break even and you're taking partial profits than you are so stubborn and you don't put it on break even. Price actually might reverse. So you want to make sure you're actually taking your partial profits, putting it on break even once you are reaching at least TP1. Okay, test it out. Don't take my word for it. Just test it out, and you will find out what's the best for you. But you see, we're actually following the trend. Pretty much, it's price action. What we're trying to do here is seeing the momentum and the volume. We did have sort of momentum to the downside right here, but that's it. That was the liquidity sweep. That's what the market was doing, sweeping. And now you wait for the market to climb back up this previous low. You draw the line. Make sure to mark up your line right there, right, on that previous low. If it comes back up and you have a fair value gap right there, that's beautiful. That would be your entry, the stop loss below the low, and go for that 1 to 2. All right, let's continue. All right, now right here from 3 a.m. to 4 p.m., in this case, what do we have? Market is pushing up. So we should be looking for buys. Okay, now right here, it is very challenging right here because what we see is important right here, that you mark up your zone very well. There, as I mentioned, you're not going to be able to catch everything every single day, but hey, look at this. When the market breaks this low, price breaks it, right? Look, after a break, aggressive break right there to that previous low is sweeping that liquidity, taking that first liquidity, right? And start pushing back up. Not just that, just do you see this? There is an imbalance right here also, this fair value gap, very strong, right? Market is actually struggling to break below, and it's stopping right here on this fair value gap. There's the biggest gap, right, from all this push to the upside. So market is in this zone, all right? It breaks, takes liquidity, and then boom, it comes back up very strong. Right here, that little fair value gap, right there, that was our entry. Basically, from there, this would have been our entry right there. The stop goes, in this case, below. I would put it actually here, like just in case. Below that low, and take profit would be at least TP1 right here, which is a 1 to 1.6. And right here looks like it would have got you on break even. As I mentioned, hitting TP1, you should be putting it on break even. If you don't want to put it on break even, hey, you should be taking at least maybe 50% of your trade. Okay. And if you don't want to put it on break even just yet, maybe at least close 50%. Very important. You want to continue holding? I mean, be my guest, but always try to aim for, if you have maybe a structure, maybe there was a previous high that you can aim. But if there's nothing on the left that you can see, just go for that 1 to 2, 1 to 3 maximum. That's it. Just call it a day. Let's go for the next one. Now, right here on this one, we have from 2 to 3 p.m. What do we have? So 2 comes up. We see aggressive breaks now starting to happen. Okay, very important to see this. We have an aggressive break happen here before, right? And then we have another aggressive break right here now happening at our hour. Okay, now it's happening right there, very aggressive. Little correction, there is no gap right there. Then price breaks again, right? In this break, look at the gap. After price again falls, look at the gap that is leaving behind. It's actually, there's a big gap in this case. There's this one, right? And there's also this one right here. How do we know which one to take? Sometimes what you can do if you have something like that, I know it's sort of big, but as I mentioned, you're risking the same thing, 1%, 2%. This would have been your entry. Your stop loss goes here. TP1 at least right there. That's your TP1. After hitting TP1, you should be on break even. Then you look a little bit on the left, as I mentioned, and you could be aiming those lows. Maybe this low, that's a TP2, or this low right there, or maybe this low is the final, and so on. At least going for that 1 to 2 risk to reward, which is almost guaranteed, that 1 to 2, not all the time, but almost. All right. But this is basically it, guys. I took the time to make this video long to explain you very well. Let me know if you want to see more of this silver bullet strategy from ICT. If you want to see more examples, maybe using something else, maybe cryptos. You are the bosses right here. You actually tell me what to do. So let me know in the comment section if you want to see more. Let me know if you like it. Give it a big thumbs up. It motivates me to keep posting videos for you guys. I know you like this type of content. So I'll see you guys in the next one. Take it easy.